Have you ever felt like you're getting whiplash trying to follow the US economy? One minute you hear about these incredible, record-breaking innovations, the next you hear whispers about a big slowdown and serious weakness. Well, you're not going crazy. It really is a tale of two markets, and today we're diving into what one analyst is calling the Jenga economy. Okay, so to really get what's going on, you have to start at the top. And right now, the top is an absolute gold rush in one very specific sector: artificial intelligence. This is the top of our economic tower, and man, it is being built higher and higher at a dizzying speed, pretty much fueled by just a crazy amount of investment and investor mania. Just take a look at Alphabet. They wanted to raise $15 billion to pour into their AI projects, so they put out a bond sale. The response? They got $90 billion in orders. I mean, the market is just screaming for a piece of the AI action. And it's not just Alphabet, not by a long shot. Microsoft just inked a deal for nearly $10 billion with a data center company called Iron. Why? To build out more cloud capacity for, you guessed it, AI. It's a full-on arms race for computing power, and these companies are spending whatever it takes. And if you want to see just how wild the expectations have gotten, look at this number. One analyst recently predicted that Nvidia, the company making all the essential AI chips, could hit a market cap of $8.5 trillion. That's a 70% jump from where it is now. The optimism is, well, it's completely off the charts. So, with all this mind-boggling growth happening at the very top, you'd think the whole economy must be on fire, right? But is that really what's happening? Is all that strength we see in the digital world of AI actually trickling down to the physical world of goods, services, and everyday jobs? Because here's the thing. While that AI tower is reaching for the clouds, some of the blocks at the very bottom of the foundation, they're starting to get a little shaky. If you know where to look, you can see some real signs of weakness. Now, this might sound kind of boring, but trust me, this is a huge tell. Think about it. Corrugated boxes are basically the lifeblood of the real economy. They move everything. So when demand for cardboard boxes drops to its lowest point in over a decade, that's a blinking red light that fewer physical things are being made, shipped, and sold, period. And we're seeing this cooling trend in the job market too. Now, with the government shutdown, we're not getting the official data. But we're not totally flying blind. We can look at alternative sources, like the ADP Private Payrolls Report, and it tells a pretty clear story. The 3-month average shows a steady downward trend. The job market is losing steam. What's really wild is that you can see this split even inside the stock market itself. You've got this tiny group of big tech giants, the ones deep in the AI race, and their stocks are just surging. But then you look at the Russell 2000, which is full of smaller, more everyday American companies, and it's seriously lagging behind. It really is a tale of two completely different markets. So how do you make sense of all this? A booming, futuristic tech sector on one side, and a struggling, everyday Main Street economy on the other. Well, this brings us to what might be the perfect metaphor for right now: the Jenga economy. This quote from Rebecca Patterson just nails it. The market keeps building higher and higher, pushed up by this AI boom. But every block that gets pulled from the foundation, like slowing shipping or a cooling job market, it makes the entire structure way more unstable. The tower gets taller, sure, but it also gets a whole lot riskier. And these disconnects are just everywhere you look. High-end consumers are still spending like crazy, while lower-income folks are really struggling. Huge companies are soaring, while small companies are just trying to hang on. We're even seeing huge demand for construction workers at the exact same time that white-collar jobs are seeing layoffs. The economy is literally being pulled in opposite directions. And what makes this whole wobbly situation even tougher is that the very people who need to steer the ship, investors, business leaders, even the Fed, are kind of flying blind. Because of the government shutdown, the really important official economic data we all rely on, it's just not coming out. And this is happening at the exact moment we need clarity the most. So without the official reports, analysts are forced to create their own mosaic of the economy. It's like instead of the official payrolls number, they're using the ADP data. Instead of government inflation reports, they're listening closely to what CEOs say on earnings calls. They're even using those box shipments as a stand-in for GDP. Now, these things give you a picture, but it's not the high-def version. It's just adding a whole lot more uncertainty to an already shaky market. So all of this, it brings us to the one massive question. When your economy is getting taller and taller, but it's resting on this narrow base of AI tech, and it's getting wobblier by the day. Just how stable is this whole thing really? Analysts see a few things that could pull the wrong Jenga block and make the whole thing tumble. For one, the market is dangerously dependent on just a few huge tech companies. There's also the risk the Fed doesn't cut interest rates like everyone hopes. That US-China trade truce, it could prove to be pretty fickle. And maybe the biggest one, if those high-end consumers who are holding everything up finally get nervous and stop spending, that could be the trigger. And so we're left with this massive paradox. We have a market hitting incredible new heights, and it's being powered by a genuine world-changing revolution in AI. But it's a growth story that's incredibly narrow, creating a structure that just feels more and more precarious with each passing day. It leaves us with the ultimate question. How long can you possibly keep building the tower higher while you keep pulling out blocks from the bottom?